Hey everyone, thanks for tuning in. We've got a lot of good stuff to talk about today as it relates to the E-mini futures. My name is Tim Racette, and I trade over at eminimind.com. And the topic of this presentation today is how you can take the E-mini futures and make full-time income from trading just 90 minutes a day. I've been trading for quite a long time, and want to share some of the things that have really been beneficial to my own trading. I've pretty much been trading the same way for the last 12, 13 years. And so over the course of the presentation today, we'll go through lots of good stuff on how you can improve your trading as well. So thanks to David for putting the presentations together. Lots of great speakers. If you just heard Matt talking about options, the strategies that I'm going to talk about, the examples I'm going to pull from the futures markets, but you can certainly take the concepts that you're going to learn here and apply them to options trading, underlying stock trading. So even if you're not an E-mini futures trader specifically, you'll be able to take something away and apply it to your trading to help you improve and become a little bit more consistent. So some of the things that we're going to talk about today, I'm a big fan on keeping things simple. So I'm going to do my best not to overwhelm you with a whole bunch of little nitty gritty pieces, but I want to talk about kind of three main areas. And, if you're looking to really have a lot more flexibility in your life, this really was kind of my drive towards turning to trading. I wanted to be able to just have flexibility, not be tied down. Going anywhere and doing anything is oftentimes what draws us to some of these more remote type self-employed business models, the entrepreneurship lifestyle. But as a lot of you know, if you have your own business or if you've worked in, a management role for a business, there's a lot of things that do tie you down to the specific location and having to go into an office. And so if you're really looking for that flexibility to be your own, control your own destiny, if you will, then trading is really a good path. A lot of times I get, folks will shoot me an email or chime in and say, hey, I want to become a trader. And after just a little bit of discussion, some people would be much better suited to buy a franchise and hire a management team and just, collect that passive income so that they can go about their day doing, other things that don't tie them to a computer. But if you are, committed to learning how to trade up front, then with just an hour and a half in the morning, you can really make a full-time income with just a little bit of effort. So if you're looking to spend time golfing, or you got grandkids or kids, or just be with your family more, and for me, I like to get outside and do a lot of mountain biking, then trading is really a good avenue to pursue. So I'm going to teach you three pieces of my trading strategy. And like I said, you don't have to trade the E-mini futures. If you do, you'll probably resonate with some of the specific examples that I pull from. But I want to teach you three pieces that will help you today so that you can start improving your trading. We're going to talk about the entry at the halfway back. I want to talk about how you can optimize your trade, specifically how I break up my position to be able to stay in winners longer and reduce my risk at the same time. And then I also want to talk about how you can trail your stop, in a specific trail stop technique that, again, you could use on the futures markets. You could use it to swing trade, but the specific technique that I use that really helps take a lot of the subjectivity out of the decision-making process. And so the more repeatable I can be, and the less I have to micromanage and make decisions once I'm in a trade, the better my trading will be, because I don't have to do a lot of on the fly or just kind of making lots of decisions throughout the trading process. So those are kind of the three pieces that we'll touch on throughout the presentation. And, you know, this is really perfect for anyone who's passionate about trading, like I said. And if you're not consistently profitable, or if you're, maybe you don't want to necessarily quit your job and become a trader full time, but you want to be able to grow yourself in your trading career side of things. Maybe if you're on the West Coast in the US, trading the NYSE Open, you're done at 7:30 in the morning, and you can go, work a traditional job, or maybe you're running a business and you've got the flexibility and the time, and you're interested in trading to, can do a number of things for you as far as income's concerned, or you're just not comfortable leaving your money in the market and you want to be able to get in and get out either on an intraday time frame or by swing trading and holding positions for a couple of days. Then these concepts and this approach is really going to be a good fit. So for those that are familiar with myself, like I said, my name is Tim Racette. I've had the pleasure of speaking at a number of these presentations through the Traders Expos, through the Money Show, and things like that. I've been trading since about 2006, and I wasn't a trust fund baby, or given $100,000 when I graduated high school or anything like that. I started when I was in college, and I was going to school. I was working at an electrical engineering firm doing some CAD drawings and that kind of stuff. And I'd taken an interest in trading because I really wanted to take control of my own financial future. And so whether you're 20 or 40 or 70, I think that's a underlying theme through a lot of traders or people who turn to trading. You want to be able to control your destiny, take control of your finances, and in doing so, trading can be, in most cases, a good way to do that. Now, if you think of a bell curve, or the shape of a bell, I do find that, when you are really young, when you don't have a lot of responsibility and a family and a, mortgage and bills to pay, or when you're on the other side of that bell curve, if the x-axis is age, the other side of the bell curve is, you're really in your later working years, or you're in retirement, you're about to retire, and you have the time and the money. So you are not necessarily afraid to place a trade. You've got the capital to work with, and you're just looking to build the skills, and you have the time to learn those skills. Those are really the two most optimal places to learn as far as, the brain and absorbing new information. When you get into that, the current stage of life that I'm in my, older than 20s, younger than 40s, when you're trying to learn something new and you have family, maybe you have kids, you have lots of stuff going on, your brain takes a little bit longer to absorb that information. So I was really fortunate to be able to learn and develop as a trader early on. And I've talked to a lot of people who are, retired and turn to trading as something to do and make a little extra income. But if you are in that, I would say 30 to 50 age bracket, don't put so much pressure on yourself to make it as a full-time trader, by the end of this year. Okay, I'm going to learn in 1 month, I'm going to quit my job and then become a full-time trader, because it adds a lot more stress to your life and to the ability to learn and grow. So some people learn faster than others, but if you put the emphasis on improving yourself as a trader and mastering the skills, then you can easily scale up, transpose it to other markets. And even if it takes you, 2 years to develop as a trader. Maybe you've been trading for a couple of years and you're kind of breaking even, or maybe you're just kind of, your account is barely treading water and slowly declining, but you're not really having these massive account blowups. You could be really, really close to getting all the pieces to fall in place, or you're just kind of missing a couple puzzle pieces. And so what we're going to talk about today should be a good way to help that and help you along in your trading. So as I said, I enjoy I day trade the E-mini futures. I also swing trade stocks. That's actually where I got my start, swing trading. And then I turned to day trading after about a year and a half, 2 years of just focusing on swing trading. And swing trading was really beneficial because it gave me some really good mental habits and discipline of being patient and waiting for trades to set up. You have to wait an entire day if you're trading off of daily bars, whereas intraday, you can be trading 24/7. So anyone who's somewhat interested in swing trading, or maybe you dabbled in swing trading, or maybe you trade options like Matt was just talking about in the last presentation, you know, swing trading can be very lucrative. And I find that it does make a good pairing to day trading. You can take these concepts that we're going to talk about and apply them to swing trading just the same. But a lot of the times when I'm day trading, if the market's moving a lot and there's a lot of volatility intraday, there's not always a ton of swing trading opportunities. But if you think back to like when volatility is really low and the market's just kind of chugging along, and you go back to last year and coming out of the COVID sell-off, 2020, the market is kind of just doing its thing, chugging along, moving higher, and there's a lot more swing trade opportunities. So they do make a nice pairing. Don't feel like in order to be a full-time trader or make a career out of this, or bottom line, just make enough money to live off of, or make enough money to fulfill your desires, hobbies, things that you want to do. You could certainly do it by swing trading as well as day trading, or maybe just a little bit of both. So spoke at a number of traders expos, and then outside of trading, I find it very beneficial to get away from the trading screen. And this is another reason why, when I first started, I was trading a lot, trading the open, the close, even I would wake up for the European Open, which was, 1, 2 o'clock in the morning Central Time. And, while that can be good in the long run, it's really not sustainable. And so fitting trading into your lifestyle and building in the structure and planned breaks, planned time away from trading is really, really healthy. I'm a big fan of like chunking my day or blocking things up. So I, will trade in the morning, and then when I get away from the screen and trading, I'm completely doing something else. But ironically, your brain is still subconsciously thinking about challenges and problems from other areas of your day and other areas of your life. So that's when I have a lot of light bulb moments, and things that have really accelerated my trading have come not when I'm sitting in front of the charts trading during the market hours. It's actually after market hours, or on the weekend, or when I'm outside, on a walk or a bike ride. That's when the creative juices and the ideas and things really start to click. So I'm a big fan of the outdoors, getting outside and exploring. I do a lot of mountain biking. I used to live in the Chicago area. That's where I grew up. Now I spend half the year in Scottsdale, Arizona, and then the other half of the year up in the Black Hills in South Dakota, or more so the summer months. So being able to get outside and explore, has really been the core of why I turned to trading in the first place. When you're young and you have all this opportunity, it can be easy to take a job and follow the career path of the job. And then 10 years down the road, kind of ask yourself, well, how did I kind of get stuck here where I don't want to be? And I kind of took a different approach of saying, okay, what do I want my life to look like? What do I want my day to look like? What things excite me, give me energy? Do I feel enthusiastic about? And in order to do those things, what kind of career or money making skills do I need to learn so that I can have longevity doing these types of activities? And so that's kind of where trading really sparked my interest, and kind of that entrepreneurship side of trading and taking control of your finances really is great. So let's talk about day trading the E-mini futures. For those that are familiar with Arizona, ASU Sun Devil, so go Devils. All right, let's get into some of my trading routine, and then we'll run through a handful of different pieces that you can start applying to your trading. So my routine, I'm a big fan of less is more. You can take your charts and put all kinds of indicators and throw all kinds of stuff on your charts, and it's just going to clutter your mind and make it very difficult to make decisions. So a good exercise is to take a look at your chart, and if there's something on your chart that you're not using, then like if it's not helping you get into a trade, manage a trade, or exit the trade, then just get rid of it. So that's the first thing I want you to do as an exercise. Try cleaning up your screen, because the cleaner you can make your trading screen, the easier it will be to make a decision. And as you all know, there's plenty of curveballs that come every single day when you're trading, and the more time it takes you to make a decision, or the more second guessing that occurs, the more the difficulty starts to amount. And so one trouble that I think people fall into is you spend so much time bouncing around from strategy to strategy that you end up layering all these different things that you've learned on top of your charts, and you start combining 15 different strategies, and then you get a entry signal over here, which is actually a exit signal over here, and it just becomes very difficult to make sense of when to get in, when to get out, and how you're going to manage the trade. So if you can spend the time cleaning up your trading screen and then really focusing on the mindset side of your trading, the setups and the entry and the exit kind of skills, if you will, or techniques are really the easy part. You know, we could sit down side by side and I could say, okay, I want you to enter, you know, every time you see this particular thing happen. But once you get in, then what are you going to do? How are you going to manage the trade? How long are you going to stay in the trade? And so investing in your mindset and being able to think clearly and be very mindful as you're going about learning trading is going to help speed up the learning curve as well. You know, you hear a lot about intuition and gut feel. And in the early days, you really need to be observant and cognizant of the thoughts that come into your head, because you want to be able to determine, okay, is my instinct, or really you want to be able to shape your intuition. So is my initial instinct correct or incorrect? And so a lot of people, you know, their first thought is, oh, you know, the market's up a lot, it's going really strong, got to jump in. And that's not the right thing to do. Oh, the market's down, I'm hearing all this bad news, I should, you know, sell everything in my 401k and jump out. And that kind of just basic being on the wrong side of big decisions like that can really cost you. And so with trading, it's the same way. You want to be able to shape your brain in a way where you can, maybe you still have the thought of, I'm a little bit nervous, maybe I should get out of this trade, but at least being able to internalize that, acknowledge it, and then not act on it. So the more you can invest in your mindset, or do, you know, things like meditation, get outside, go on walks, reading is really beneficial, even if it's not a trading specific book. It just really helps get your mindset in a very good place to be able to trade. And the other thing I like to think about is, you know, trading is really a means to an end. So if you can create those long-term vision, or what you want for your life to look like, you know, that long-term goal, I mean, even less so goal and more so picture. Paint the picture of what your perfect day looks like, and then you can start setting those goals and kind of work backward of what it will take to get there. So then designing your lifestyle around trading, the things you like to do, family, obligations, that kind of stuff, you really start to build a bigger picture so that when you are going through the trenches of trading, or you have a tough day or a bad week, you have your reason why you're doing this in the first place, and it can really help you kind of carry you through. So my background, in addition to trading, is competitive mountain biking and bike racing, and so there are a lot of parallels for athletes out there, or musicians, or anyone who's doing a very high level activity, to really take those concepts and apply them to the mental side of trading as well. You'll notice that people that tend to have success in one area of their life, and then they change careers, and then they do a million other things, they kind of can rise to the top no matter where they go. And it's not that they have the skills already to make that career move and do that new thing, they have the mindset to be able to be successful. And that's what you want to cultivate well before you spend all your time and energy learning the setups themselves. So freeing up more time to have just space to think and let your brain work. You don't need to cram your whole day with social media and video and all kinds of mindless entertainment. And then the last thing before we jump into the more tactics and strategies here is just the positive affirmations and self-talk really is important. The more you can think about what you want and visualize, talk to yourself in a positive way, maybe write down some mantras or things that really help you keep a positive mindset, really do go a long way. And that's why that bell curve I referenced, people that are really young and really old, they have a lot more time and mental capacity and less stress. And so you're talking to yourself in a more positive way instead of being scared or having just all the stresses that come from having a family, having kids, having bills, and all the stuff that most people 30s, 40s, 50s will face, versus when you're in your early 20s or you're more towards retirement age. So I always like to start with that, just to give you a bigger picture of my general philosophy, and how you can even take that and apply it to improve your trading even before you start looking at the entries and the trade management itself. So one thing I want to begin with is a little bit of the way that I set up my chart. And if you're trading intraday, there's a lot of different charts you can look at. You could use a 5-minute chart or a 1-minute chart. There's all different types of things. I like to use a tick chart. And the reason I just wanted to start with this is because when you're looking at the charts here, they might look a little bit different than yours. And so a tick chart is really just a variation of the time frame. So instead of a 1-minute time frame or an hourly time frame or even like a daily time frame, the tick chart is based on a number of transactions, and then the bar closes. So instead of 1 minute of time forming and then the bar closing, the next bar forming, the tick chart that I use will be a number of transactions. So in this case, 512 transactions take place, the bar forms, and then the next candle starts to form. So you can glean a lot of information from the price action in the candles themselves. If you have a lot of faster forming bars, it means there's a lot more transactions. If you have slow moving bars, you don't have as many transactions. So just think regular trading hours versus after hours. A 5-minute bar is going to take the same amount of time to form, whether it's during trading hours or afterwards, but a tick chart's going to be, you're going to have a lot more bars forming over that same time period during the trading hours, especially in that morning session, than at the overnight hours. So it's totally derived from price and just another form of price action. And that's just the way that I like to set up my charts, to be able to take advantage of, not a super popular way to look at the charts. So you get a little bit of an edge, kind of framing it in this way. Really anything that you're doing to interpret price action is just you putting on a different set of glasses and a different lens to look through it. When you draw support and resistance lines, when you draw Bollinger Bands, Fibonacci retracements, whatever you're putting on the chart, it's just your way of filtering the information. So everyone's looking at the same pieces of information, and that's why keeping it as simple as possible, a basic candlestick chart or even a bar chart, and just really focusing on the price action itself is the best place to start. So moving from there to identifying the trend so that we can talk about the best places to look for entries when we get to the halfway back entry placement. I like to, when you look at the market structure, we all understand that the market undulates and it kind of advances, pulls back. It's kind of made up of these little stair steps, or whatever you want to call it. It's not just going straight up from point A to point B. And so no matter what your entry is, you want to start with asking yourself, okay, where do I want to place these trades? We can start by taking the day, the 24 hours, and compartmentalizing it and bringing it down to those first 90 minutes after the NYSE opens, because that's when the most volume and trading activity is going to occur. That's when you're going to have, the biggest gaps at the market open, the biggest movement, the biggest volume. And so that's why the first 90 minutes of the day are so valuable. And I do all of my day trading in that first 90 minutes. Any swing trading that I do, I typically manage in the last 15, 20 minutes of the day. And that's really it. The rest of the day, I'm not, actively trading, unless for some reason I was still in a trade and I was just trailing my stop. After that first 90 minutes, I'm pretty much done. So looking at just the basic market structure, those emotions of fear and greed are really what drive the market to go up and pull back and, take off and sell off and be jumping all around. And so those basic understanding of, okay, an uptrend, higher highs and higher lows, downtrend, lower highs and lower lows, really are the foundation for understanding, okay, where is the trend change and where is the market likely to change trend? And so when we look at that, just those basics of higher high, higher low, and then a downtrend, lower high, lower low, it's when we change and break that pattern that the trend starts to change. So if you're moving down, lower highs, lower low, lower high, lower low, and then you come up and break a swing high. And so now that pattern, lower high, lower low, lower high, lower low, and then all of a sudden you have a higher high. That's the market starting to change that downtrend pattern. And so being able to spot those trend changes, the second exercise, I talked about cleaning up your chart. The second exercise would be to print out like a 5-minute chart of the ES and just go through and mark the swing highs where the market, makes a high and then makes a low. And how does it relate to the prior swing high and swing low? And then you can go through and you either just kind of highlight the general trends, and you might have an uptrend for a half hour and then a downtrend, and then might just kind of be going sideways, or you might get a triangle. And so those trends and patterns just repeat themselves all day long. And so being able to identify those trend changes when you're going from an uptrend to a downtrend, or downtrend to an uptrend, or when there's just not really any trend and you're moving sideways, that's a very useful skill, because it allows you, if you're only a trend trader it allows you to determine, okay, I need to sit on my hands here. There's no trend. I don't need to overtrade or, take unnecessary risks such that, I start the day with a couple of stop outs. And then by the time I get to a winning trade in a nice trending market, all I'm doing is making it back and getting to break even. So identifying the trend is really important because it helps you determine where the trend is changing. And so if we get to the, here's an example of just marking, higher high, higher low. And so when you get that higher high after a downtrend, waiting for that next pullback, not just chasing it higher, but waiting for the pullback and buying that pullback after the downtrend has broke the swing high is a good place to start looking for a long setup. So looking at the halfway back entry, kind of the first piece that I wanted to drive home, I like to just by using the basic fib tool. I use Thinkorswim charts, but you can use whatever platform you want. And just using simply the 50% retracement of the fib tool will allow you to determine the halfway point. And this is something that the pit traders would do with the hourly chart or the hour time frame. Take the high and low of the first hour, divide it by 2. That's the halfway back point. And so that on a smaller scale is a really good way to look for potential, we'll call them reversals, but really it's a continuation of the trend. And so if the market is moving down and then you start to rally a little bit, if the bigger trend is down, when the market rallies, you can use that halfway back point as a place to look for a resumption of the trend and getting short. And then just a matter of, whether you're using a 512 tick chart or a 15-minute or a 5-minute chart, drawing up those retracements to practice locating the 50% or the halfway back. And then you can either enter right at that 50% level. If you're already trading a different type of entry, you can just use that as a support or resistance level that you've identified to then get into a trade. But that halfway back point is a really good way to ensure that you're not chasing the market higher or lower, and you're getting in when it's not super cut and dry. By the time the trend is so clear, hey, we're in an uptrend, we've been in an uptrend for a couple hours, it's probably too late to get in. And so by leaning on the halfway back, you are one of the early adopters to getting into the trade. You can already establish the trend and then jump into the trend once the market pulls back. So just by using the simple fib tool, you can get that retracement. You always want to draw from left to right when you're doing that. That way, if the market's moving down, you'll be drawing up a short, if you will. If you're just using the 50% and the fib tool to identify the 50%, it's not as critical whether, you're going to determine if the trend is up or down, and then the 50% is going to give you the halfway back point. So that's the halfway back, the 50%. On the ES, just to give you some more useful things, I use a 2-point stop on the ES, which is small enough, but not so tight that you get in and you're going to get taken out for just 2 ticks, let's say, right away. The other thing about the ES or any of the E-mini futures is that there's benefits from a tax perspective. You don't have that much slippage. Maybe if you're trading the YM, the YM and the NQ move a lot faster. It's a lot more difficult to manage the trade ladder. And so those are ones that you want to be a little bit more careful with if you're just starting out. But yeah, 2-point stop on the ES is really great because it gives you some wiggle room, but it's not so tight. And then a 1-to-1 ratio, meaning a 2-point profit is 1-to-1. that's not a very big move. And so that's easy to get hit. And you can just take, if you do trade NQ, just take the 2 points on the ES is $100 per contract. You can just take the equivalent 20 points on the NQ and boom, there's your, rough stop placement for NQ. The second piece in optimizing your trade to really help you stay in trades longer, the winning trades, more importantly, is to break up your trade in a way where you can reduce the risk on the trade early on. So what I like to do is split the trade in half. And so using that 2 point stop on the ES, I like to use a 3 point first target. So if you're trading 2 contracts, one contract can be the 3 point first target. And then the second contract is going to be your contract that you're going to trail. If you are trading the minis and you're only trading 1 contract, I would strongly encourage you to think about trading the micros and trade at least, 2 contracts. You don't want to be trading 20 contracts in the micros because you're just eating up commission, but 2, 4, even 6 contracts on the micros will help you build a lot of good habits and be comfortable managing multiple contracts. Trading 1 contract is so difficult because you only have 1 exit point. And if you decide I'm going to use, let's say, the 3 point target, well, that's your exit. That's your 1 exit point. And if it runs past that, what are you going to do? You're going to say, well, shoot, next time I really need to trail my stop because that trade went a lot further. So the next trade, you start trailing your stop. And what does it do? It goes 3 points and reverses. So trading multiple contracts is much, much easier than trading 1 contract. So in order to optimize your trade and not have to think about how to manage each trade individually, I prefer to trade the same way every single time. And so I'll use a 3 point target on the first half. So if you have 8 contracts, 4 contracts get taken off at 3 points, and then you have 4 contracts left to trail. That second half, trailing your stop on the second half is what we'll get to. What we'll get to next here. When you're putting in your orders, the other nice thing is you can just set your bracket to have your stop. Once you click your entry, your first target goes out there, and then the second half of the position, I just leave open-ended, and then I just, I trail that. So the trail stop technique that, again, you can use this on intraday trading. You can swing trade. It doesn't really matter the time frame. This is probably one of the most helpful techniques, if you will, that can really extend your trading gains. So using the 50% retracement example, entering at the 50%, the halfway back, using that 2 point stop, let's say you just have 2 contracts. So you have 1 contract that has a 3 point target and you get that hit, then trailing the second half is where you make your money. If you think about a batter stepping up to the plate or a golfer stepping up to the tee box, you don't want to try to murder the ball when you get up there and swing as hard as you can. You practice and practice and practice having the proper technique, a smooth stroke, a snap of the wrist when you're up at the plate playing baseball. And you're going to swing the same way every single time. Sometimes you connect, sometimes you hit a home run. And so by trading the same way every single time, if the market decides it's going to rip, you can take advantage of that with trailing your stop. This particular chart, is a Hakanashi candlestick with that 512 tick chart. But again, this could, for all intents and purposes, could be a daily chart, an hourly chart. It doesn't matter. So here's 3 ways you can trail your stop. The first one is using that Fibonacci tool. You can trail the 61.8. And basically, this is just giving you a little bit of room to let the market move without being so tight that you get taken out. With the E-mini futures, especially, a tight stop is not the way to go as far as like, well, I want this to be a winning trade. I don't want to lose money on the trade. and so I'm up 2 ticks or I'm up a point, I need to move my stop to break even. You're going to be stopped out so many times, and even if you have a really high win rate, your losses, let's say you take a 2 tick profit on every trade and you have a 85% win rate, well, one loser of 2 points is going to really erode a whole bunch of those small profit target winners. So having a patience at the start is important. And the other thing that the first target does is it allows you to get that first, quick win, if you will. And all of a sudden, worst case scenario, I'm in a winning, I come away with a small winner. That allows you to, breathe a little bit, sit back in your chair and let the trade run, and you can catch those bigger winners by trailing your stop. If you're just in a trade with an unopened, you haven't taken any profit and your stop is still where it started, you're going to be kind of heart rate racing and thinking, oh, should I get out here? I'm up 6 points. I don't want to let it come back at me versus, oh, hey, my worst case scenario is a small winner and the trade's starting to run. Now I'm going to just trail my stop and let it go. So you can trail the next 61.8. The second place I like to trail is above or below the swing highs. So the same thing we would look at when identifying the trend. And when the trend is about to change, well, if it breaks a swing low, if you're long and the market's moving higher high, higher low, higher high, higher low, all of a sudden, if it breaks a swing low, you have the potential or the likelihood that the trend is now changing. And so that's a perfect place to put your stop. And so just trailing swing lows on the way up is a really great way to stay in the trade as long as the momentum's going your way. And then the third way, sometimes the market really takes off. I'll do this a lot on the daily chart as well, but you can trail each candle. So when we're talking about futures, just using, one tick outside of the candle. So if you're long, just trailing, 1 or 2 ticks even below each candle if it's moving really strongly and fast. And sometimes when the market gets really volatile, especially the ES, now you could drop 10 points in a minute or two. And I don't want my stop to be, 10 or 12 points away from where price is. So this is a good way to allow you to trail your stop. So you're not just, hitting the flatten or hitting the exit flatten button and getting out of the trade at whatever the price is. You're trailing your stop, so you're still giving it room to run. And that way, if it goes another 5 or 6 points, you can capture more gain without limiting yourself. So those 3 trail stop techniques are super helpful. The one I probably use the most is the swing highs and swing lows. And then if all of a sudden, like, let's say I start by trailing swing lows and I'm long, and I trail the swing lows and all of a sudden we start to take off, well, then I can just switch to trailing each candle and I can just drag my stop up tighter and tighter. If you've got multiple contracts, you could do some of both. Let's say you have 2 contracts left that you're trailing. You could trail swing lows with 1, and you could trail each candle with the second one. But again, trying to keep it as simple as possible is really beneficial because when the market gets moving quickly, it can be easy to make mistakes, and you don't want to be making mistakes with your trade ladder or clicking around and accidentally, get out of a trade too early, or those mistakes can be easily avoided with just some time and familiarity with your trade ladder. So the simpler you can make your trading strategy, the easier it will be to execute. I also wanted to touch on the nicey tick really quick because I didn't mean for that to rhyme, but do it all the time. The nicey tick is really helpful to futures traders, especially for the E-mini futures. And so if you are getting long, I won't go into too much detail, but if you're getting long, you want the nicey tick to be in a low tick. And if you're getting short, you want the nicey tick to be in a high tick. So on Thinkorswim, it's just $TICK. If you're trading the NASDAQ, $TICK/Q. And it's a really, really helpful tool for intraday traders. As you can see, my charts are basically just the candles, and then I've got this nicey tick chart in the bottom left. And so getting long with a corresponding low tick and getting short with a corresponding high tick is really what can help you pinpoint those entries and even exits. If you're long and the market is ripping and you get a new high tick, that can be a good place to take profit. As you get into more contracts, you have more ability to say, well, I got 4 contracts left. Here we got a high tick and my stop is, 8 points away. I'm going to take 2 off at this high tick, and then I'm going to start trailing my stop tighter. And so with getting into more contracts, you don't want to fall in the trap of, well, I put 10 contracts on, I'm going to take 8 off for a 2-tick profit. You still want each contract to have a good risk to reward per the stop. So if you're using a 2-point stop, you don't want to be taking less than the 2-point target. And with the ES and with being an individual trader, it doesn't really pay to try and scalp or to take these small, really tiny profits, because you're fighting against high frequency trading firms that are doing it, faster, more volume, and better than you or I could ever do it. So kind of finding that sweet spot of, okay, I want to be able to get a 5 or 6 point winner. And if I get a home run and I take away 10, 15, sometimes a 20-point runner, then things can really start to add up, especially when you're only using a 2-point stop. The reward to risk is very much in your favor. So let's just kind of summarize things, and then I'll leave you with a couple parting notes here. So the entry at the halfway back, using the 512 tick chart is really good. It's a good starting place for the E-mini futures. If you prefer to swing trade or use a bigger time frame, that's fine. The halfway back is still a good place to look for trade entries. Identifying the trend and locating the change in trend is almost more important than the setup itself, because you could find dozens and dozens of halfway backs throughout the day. But if we're just range bound and you're taking a halfway back in the middle of a range when we're not actually going anywhere, you can just get chopped up. So identify the trend and then look for that change in trend. Find other support and resistance levels. You don't have to overcomplicate it. I like to look at the prior day's high, low, close and places where we spent a lot of time. So some people use market profile. Some people just look at the candles themselves. And if you spend a lot of time at 4,010, then when you return to that level, you might find it being support or resistance. And then leaning on those swing highs and swing lows for not only the trail stop, but helping you identify the change in trend and identifying support and resistance levels. On the daily chart, if you just kind of follow along, where's the most recent swing high or swing low, you can, sometimes we'll go weeks with just a nice clean uptrend. Then we break a swing low. And then, hey, here we start our nice clean downtrend. Usually the down moves are a lot faster than the up moves. And you can take that information on the daily and use it intraday, knowing that, okay, we just broke a swing low on the daily chart. There could be a lot of downside momentum. So if I see a short setup, there's a lot better, there's a higher chance that it's going to get momentum behind it. And then, yeah, that 50% on the 512 tick chart. To optimize your trade, breaking it up with a first target, using that 2-point initial stop on the ES, and then using that 3-point first target is really, really helpful. On paper, it's actually more profitable to just do an all-in, all-out and trail your stop, just 100% trail stop. But in reality, it's much easier and more practical and keeps your P&L a lot smoother. You don't have, if you only trailed your stop, you'd have big winners and then a whole lot of stop outs. And that's very difficult for people to be, the end, either end of the extreme. So doing the 3-point first target is really helpful. And then trailing your stop with the 61.8 or swing highs and swing lows or each candle. And staying in those winning trades longer is really what's going to help you become much more than a break-even trader, because the stop outs can offset with small winners, and then boom, you have a nice home run and you get a couple of those per week. That's really all you need to all of a sudden come away with 20, 30, 40 points, even per contract. And then all of a sudden you start scaling up. You're trading two. Let's say you start in the micros, you make 50 trades, you assess your results, you make another 50 trades. You're like, yeah, okay, I'm starting to get some repetition, some confidence. It's been a couple months. I'm going to switch to the minis with 2 contracts. And you do that for 3-4 months. You feel comfortable with it. You've been through, up, down, sideways market. Then you can move to, 4, 6 contracts, and you don't really need to go crazy. 4, 6, 8 contracts, you can do a lot, even with 4 in the ES. So if you want to learn more about this kind of stuff, you check out, I've got videos on YouTube, or you can go over to eMiniMind. A lot of mindset stuff over on the blog, because that's where a lot of the value is in doing this as a career, or the longevity comes with your mindset. And then I'm also doing a masterclass on this very thing, day trading futures. Usually do it once a year in December. So it's going to be December 5th at 6 p.m. And we'll go through, I basically run through all of my trading strategy start to finish as it pertains to the retracements here. And we even talk about the NYSE tick as well. So we'll go through all those details in depth. And it's a good launch point if you are interested in day trading futures, or if you've been day trading for a while. Maybe you've done some of these techniques and you want to kind of clean it up, simplify, put it all together, and then be ready come January. Because between Christmas and New Year's, the markets can be kind of dead, and it's a good time to kind of review, take the year into, just reflect on the year and reset, set some objectives for the next year. And so it's just a nice time to kind of run through your trading plan, hone your skills a little bit. You've got a couple of weeks after we do the class to be able to practice, and then set yourself up for January to be able to actually implement. And then I'll also do for the webinar here, I'll throw in a 30-minute one-on-one coaching session if you want to do the class, and we can chat about your individual challenges or things that you're having trouble with or whatnot, and help shed some light on those. And then I've also got another class on swing trading that I will throw in as well. So you can review the swing trading class in the weeks leading up to the live masterclass. And you can just go over to, it's eMiniMind.com/masterclass, where you can check that out. Or you can just check out the videos on YouTube, stuff on the blog. And you can always shoot me an email or hit me up on, usually Twitter is really the only spot that on the social media or whatnot. So thanks for tuning in today. Hope you're able to grab a few nuggets and apply them to your trading, even if it's just a simple thing as the trail stop. There's a lot of benefit to keeping your trading as simple as possible. And so when you do find something that resonates, it's more important to go deeper into that thing than be jumping all over the place and being really thin and just kind of have a basic understanding of 50 different concepts. You're going to be much better off finding 1 or 2 things that really resonate with you, or a market that you really enjoy. I don't like to use the word feel comfortable, because oftentimes that can lead to kind of being stagnant or just not growing. But if something resonates with you, or if there's a particular way to think about the markets, then really go deeper into that thing. And that's where the that's where the benefits can come. And yeah, I apologize. I had 2023. I was already thinking ahead, I guess. The December of 2022. So a few weeks from now is going to be the masterclass. So thanks everyone for tuning in. We've got a lot of great speakers left on the day. If you do have questions, I got my email there, Tim@eveningmind. You can hit me up, and happy to chat, trading, bikes, beer, whatever you like. So thanks for tuning in, everyone. Thanks for having me, David, and I will talk to everyone soon.